Trading was frustrating and hard until I found my perfect strategy that is easy and simple to follow. I struggled for over 4 years going through endless amount of strategies and losing tens of thousands of dollars in the market. Until I realized everything was too overcomplicated and there was too many indicators to follow for a trade to set up. So I decided to stick to one very simple and effective strategy that made me profitable. I made over 100K last month using this strategy and trading plan that I'll lay out in detail in this entire video. I believe the more simpler you make things, the more easier it is for you to follow. I believe simplicity equals profitability, so I set up 10 rules that anybody can follow. So scalping is simple. Once you learn these 10 rules I'll be going over today in this video, the same rules I applied to get results like this month after month. But you have to understand, it took me 3 years to become profitable. Trading is not a get-rich-quick business. It takes time to become profitable. So the whole purpose of this video today is to go over everything that I've learned in the 3 years of me failing so I can get you on the road to profitability. 90% of traders fail because two main things: human emotion and losing too often or too big. Look at your trading P&L. If you're able to eliminate one or two of your biggest red days of the month, most likely you will be profitable. A lot of times you have little wins stacking up, but one big red day kills all of your momentum for the month. Luckily, with the 10 simple rules, I was able to 10x my chances of becoming profitable. And in this video, I'll be going over all of the 10 rules and lessons that I have learned on my journey of these last 3 years of being unprofitable. Lesson number 1, we first need to find a profitable scalping strategy, and this needs to be a priority. Finding a strategy with a proven edge has to be your number 1 goal, and we'll talk about how to build your own profitable edge later in this video. An edge is simply something that differentiates you and other traders, and that is how you become profitable, so stay tuned. Later in this video I'll explain exactly how that works. However, we're going to be going over the profitable scalping strategies that I use on a daily basis, with strategy number 1 being the pre-market high and low strategy. And essentially what we're doing is marking out the pre-market high and the pre-market low levels, and we're going to be looking for a break to the upside or to the downside. And what we do is we wait for that retest on wherever we broke. We wait for the retest, then we look for continuation moving on in the same direction. Even to the upside, we wait for that retest, then we look for continuation back to the upside. But for this example right here, we can see we broke the pre-market lows here. We got a retest right here with selling pressure indicating the trade. We took it to the downside, and you can see this trade worked out perfectly fine. For the second strategy is a 1 candle rule. And for this strategy, we don't have to mark out any levels on the day. We just need a strong momentum stock pushing to the up or to the downside. And essentially what we look for is the previous red candle on this uptrend here. And right before this right here, this pullback, we had this previous red candle right here, indicating there was a demand zone right here. And all we have to do is look for a pullback to this demand zone, and if it holds structure, we can take this trade to the upside. And as you can see, we had a lot of buying pressure off this demand zone, and the stock hit a new high of day. Now for the downside move on the 1 candle strategy, instead of looking for the red candle on the uptrend, we're going to be looking for the green candle on the downtrend to mark out and look for a retest and continuation to the downside. So remember, the red candle is for the uptrend and the green candle is for the downtrend for the 1 candle strategy. So my third strategy is going to be the opening range strategy. And pretty much what I do is mark out the first 5 to 15 minutes of market open. At 9:30 a.m. the New York session opens, so I usually wait 5 to 15 minutes, mark out the high and low of that opening session. Then I usually wait for a break to the up or to the downside, look for the retest, and look for continuation if we hold these levels that we broke. So these are my top 3 scalping strategies that I use on a daily basis, and I trade live in my Discord in front of all my members. I do these 3 strategies that give me a high win rate. Now with that being said, all of these 3 strategies work. Or you can trade a completely different strategy because there's so many out there like ICT, SMC, supply and demand, price action. But one thing to remember is Simplicity equals profitability. The strategies that I use are very simple, and that's why I'm able to see consistent profits because I don't overcomplicate my own strategies. There'll be a lot of people complaining that trading is hard because they're trading very complex strategies that have too many indicators or too many concepts to even get into the trade. Rule number 2, you need to master market structure. Just because you're scalping doesn't mean you ignore the stock's trend. As a scalper, you look for quick moves and to be done with the day early. And for a quick recap on market structure, for an uptrend, we look for a high to be formed and then a lower high that is higher than the previous low to form, and then simply a new high and then a higher low, pretty much a higher high, higher low, indicating an uptrend. And for a sideways trend, pretty much a choppy trend is what we call it, is we look for equal highs and equal lows. And pretty much I kind of tend not to trade in a choppy range so much because it's very limited moves and not too much price action. For a downtrend, we simply look for a low and a lower high and continuation, a lower low, lower high. That's pretty simple. Same thing as the uptrend. The downtrend is the same thing to the downside. Now, if I ask you which trade has a higher probability chance to win, now that we understand market structure, now both of these are using the one candle strategy that we talked about earlier in this video. So what we know about the one candle strategy is we look for the previous down closed candle to support a uptrend in a bullish structure. So down in the comments, I want you to comment if option A is a better choice to take the trade or option B is going to be the better choice. So after putting the comments down below, these are the results. Option A was a clear winner going to the upside, and option B was a low probability setup. And we're going to go over why. So option A is because we had clear market structure. We had a nice uptrend with higher highs and higher lows. We had a nice high here formed, a higher low formed, a higher high, and pretty much a good uptrend in this market structure. And when we mark out our previous red candle, we held this structure to the upside, indicating a nice bullish structure. So this was a A+ setup using market structure. We could have got filled right here on this trade, and we could have took it to high a day and plus some. Option B was a failure because we had a low probability. There was no trend in market structure here. We had a high and a low, and we had a lower high form, but then we also had a higher low form, which indicates we're in range. We was not really trending, and this was a poor trade if you took it due to market structure. And this is very important to understand because this is how you avoid a lot of losing trades and how you increase your win rate. And what this shows you, you can trade the same strategy, but without understanding how the stock moves, you will always lose money. And this is exactly where we add in our third rule. Our third rule is how to always enter a trade the right way. You need to combine all the time frames, even if you're scalping, using the 1, 5, and 15 minute time frames. But a lot of people, what they don't understand is we use the higher time frames to execute on the smaller time frames. So by doing this, it will help you finish the day earlier with a high probability trade. And I'm going to show you a real example on exactly how this works. For this example, we're on the daily chart on SPY here. And initially what we want to do is look for what the stock is doing. And what I like to do is do a top-down analysis. So pretty much what I do is I look from a higher time frame and go down to the smaller time frame. So I go on a daily, 4 hour, 1 hour, and then I jump down to the 1 minute here. So on the daily time frame, you can see the SPY stock is gapping up here. So what we want to do here is mark out the low and the high on this daily time frame candlestick. Then what we're going to do is jump down to the 4 hour time frame, and as you can see, we're breaking above in the pre-market here. We have strong bullish structure here. A lot of buyers are stepping up here on SPY. So going down to the 1 hour time frame, we can see in the pre-market, this is a prime move to the upside. So I'll be looking to take SPY to the upside since we have so much bullish structure building up here. So we're going to jump down to the 1 minute time frame here at market open. And we're going to see if we can maintain above the 583, the daily high. As you can see, SPY is holding above this 583 level, and we have a strong bullish momentum to the upside. So one of our strategies in our arsenal is going to be the one candlestick rule here. So we're going to mark out our previous red candle here as a demand zone. And we're simply going to look for a retest here. And if there's strong enough buyers, we're going to take this to the upside. As you can see here, we formed a really strong wick here on the 1 minute chart, holding our demand zone on this 1 minute candle. So we're going to enter on this trade here, keeping our stop loss a break of structure and looking for a 2R multiple, or at least a whole psychological number like 585 here is going to be our target. So let's see how this trade plays out. And boom, as you can see, we fully hit our take profit here. We made around $940 just off this single trade, and it's 9:56 in the morning and the market opens at 9:30. So as you can see, within 26 minutes of the day, we're already done. We made our profits and we could go enjoy the rest of our day. Rule number 4 is 90% of scalping trades should work right away. If you've done everything correctly from step 1 to 3 so far, the majority of your trades should work within minutes of entering. And what do I mean by when I say they should work right away in your favor? I'm going to go to some real life examples right here to show you. Starting with this Tesla trade, this was a $12,000 trade on Tesla and with a 60% ROI. And how I caught this trade was this was a previous day low trade. So pretty much this red line here was a previous day low. And when we opened up, we came to test it and then we started to downtrend all day off of this level. So at this candle right here, I was looking for bearish structure to continue. And as soon as we got that, I entered right here on this candlestick. And as you can see, it went completely my way. And from both my entries on Tesla, we had 0 drawdowns. Here's my first entry and my second entry on these candlesticks. And the reason why is because these are profitable and proven strategies that I used over time. And simply, we would have got stopped out if we pushed back above previous day low. So our risk to reward was really tight on this trade and our risk management was kept in check. With that being said, we easily would have got stopped out of our trade if we broke back above previous day low here. For the second example here, this is a losing trade on Apple. We lost $1,600 here, minus 22% on this trade. And as you can see, we had the previous day right here marked out and we actually broke above it and was looking to catch that retest. And I caught it right here on the second retest with bullish momentum to the upside. And we did not break high of day here on this bullish momentum. This should have worked out immediately in our favor, but just because it didn't and we started to push back down to this resistance area, I simply stopped out of my trade. I didn't hold on to this trade hoping it would work out in my favor. I just simply stopped out and kept it moving. We're down about $1,200 on the day because of this Apple trade, but from the Tesla trade, we're a positive $12,000. And the important thing to take from this is I always keep my wins big and my losses small. If you always have bigger losses than your winners, you're never going to become profitable. Your wins should always be bigger than your losses here. And the beauty about scalping is within the first 5 minutes, we're going to know whether the trade works or it fails. So we should immediately get in and it should move in our favor. If it doesn't, we just hit our stop loss and we get out. So we're not going to be sitting and holding all day hoping a trade will work in our favor. And if it's a choppy day, we just simply don't take a trade. All right, rule number 5. And this is another crucial rule that you have to understand. And that is making your winners bigger than your losers. As you can see in the previous example, the $12,000 Tesla trade I took versus the negative $1,200 trade I took on Apple, I kept my winners bigger than my losses. And that shows that I don't need to have a high win rate. All we need is really good risk management here in trading. All right, so when we come over here to this chart, I'm gonna help you visualize exactly what I'm talking about. So here's a loss of 10% of capital. So when you're down 10%, you would have to make 11% just to get back to break even. So let's say you risk 10% of your account per trade. And that's saying you put your whole account risking 10%. You would have to lose 10 trades consecutively to blow your account. However, with the proper strategy, losing 10 trades in a row is actually really hard. So even then, risking 10%, it still takes 10 trades to blow your account. Now, let's say you risk 50% of your account per trade. If you lose 2 trades in a row, you have blown your account already. And that's something you want to avoid. If you're down 50% on your account, you would have to make up 100% to get back to break even. So let's say you have a $10,000 account, you lose 50% and you're at 5,000, you would have to double that 5,000 to get back to break even at 10 grand. Now to make this even more clear, my win rate is around 50 to 60% plus on a monthly average. And what I try to sit around is a 2-to-1 risk to reward. So if I'm risking $100 per trade, I want to at least make 200 or more in profit. Essentially, whatever I'm risking, I want to at least 2x my risk. For example, let's say I have $1,000 account and I'm risking 10% per trade with a 2-to-1 risk to reward ratio, assuming I have a 50% win rate. And to visually show you here, these are the 10 trades that we took for this example. 5 of them are losses, but 5 of them are winners. And you can see with the 2-to-1 risk to reward ratio, we are still profitable with 5 winners and 5 losses because we win $200, 2x more than what we lose. So we actually gained $500 on this account with a 50% win rate. Rule number 6, and this is a question I get asked a lot. Should you have a break-even stop loss? In theory, I'm risking about 20% on my day trades. I really don't let it go over that or else it's going to be too hard to get back. So if I'm risking 20%, my 2-to-1 risk to reward ratio should mean I should be looking for a 40% plus in a trade. But in reality, we're not always going to get 40% trades plus every single time. So if I'm risking 20% on my trade and my trade goes 20% in my favor, I would like to move my negative 20% stop loss to break even and then take some trims while I'm at 20% profit. I'll sell some contracts to cover my risk. And if we get back to break even, I'll fully get out. It's impossible to let a green trade go red. If you're in 20% profit and you have break-even stops and you already took some profit to cover your risk, you cannot go wrong with that. And let's just say the trade plays out even more. I'll use a trailing stop loss and follow right behind it because I like to lock in profits while it's going in my direction. A lot of people will hold a trade and only sell it once it starts crashing back down. But you don't want to be up 60, 80%, even 100% on a trade. And in the next minute, it starts crashing back down and you're back to break even and you didn't take any profits. So with this system, you have to take profits while it's going in your favor, cover your risk, move break even stop loss, and just move it up slowly behind. And this is how you catch really big trades. When a stock starts to take off or it starts dumping down in your direction, you just follow right behind it as far as it goes. And sometimes I catch 100 to 200+% trades using this method. Rule number 7, start with small size and slowly scale up. This is one of the most important rules that a lot of traders fail to mention. You have a higher probability of becoming profitable later on in your journey. So if the bottom line X was time and the top Y was money, the longer you stay in trading, the higher probability of you making money. And why, you may ask? Because the longer you stay in trading, the more skills you acquire, the better you get at your craft, and eventually you focus on the process more than the money. And that's what brings you to profitability. The problem is so many traders want to get money fast. So if they don't make money within the first year or two, they're going to try to take some big risk trades and they're going to blow all of their capital. And then they won't stay in trading because now they have no capital to stay in the game. So coming back here, I took the same trades 4 years ago, making $100 a day to now making sometimes $10,000 days. The only thing that changed was my size and experience. In the beginning, I knew the money would come in the long run as long as I focused on controlling my emotions and perfecting my executions. So if you're a beginner coming into trading, you don't want to try to make as much money as you can as quick as possible because that'll only lead to breaking rules, not taking good setups, and just straight blowing your account, leaving you with no money to stay in trading. And that's why a lot of people think trading is a scam or it just doesn't work because they try to get rich quick and they blow all of their money and they don't have no more money to stay in the game. I was able to do this for so long because I stayed in trading even if I won or lost, even after years of losing too. I was always able to manage my risk and manage my capital to where I would never lose all of my money at one time. Yes, I had a lot of ups and downs in my journey, but I was always able to make sure I never lost all of my money before I actually had a good strategy and system in place. Rule number 8, out of every 30 good trading days, you'll only have 10 to 15 A plus setup conditions come up out of the month. This is very key for you to remember. Not every day is going to be a good trading day and you need to be aware of that. So coming down, if I give you option 1 or option 2 to trade, which day would you trade? Leave it in the comments down below. If you chose option 2, you were right, but if you chose option 1, you were wrong. Here you can simply see we have the 5-minute setup, the 5-minute high and 5-minute low. And as you can see, as soon as we broke above this 5-minute high and we took this retest, we would have lost $500. The second time we took this retest, we would have lost $1,200 trying to chase it again. And the third time when it came around and we took it again, we would have actually won, but still overall would have been a red day for us. Overall, we took 3 trades and we're still net negative and we just had a whole bunch of consolidation going on in this day. And if we go over here to option 2, this is the same 5-minute setup and we would have won $700 on the first trade, taking this 5-minute breakout. And then the second trade, we would have won again using the 1 candle rule. So option 1, we took 3 trades, and option 2, we took 2 trades, which was a lot better on option 2 because we had a lot better market structure. And not only mentally was it easier to trade option 2, it was overall easier just because we had an overall good structure and upwards momentum. Otherwise, option 1 was just a choppy day. Option 1 would have been mentally draining and we would have still been down net negative on the day after taking 3 trades, trading all day. And in option 2, we took 2 good trades in the morning and called it a day with good, perfect market structure. So what you need to understand, your trading edge is designed for certain conditions. So when you do find your profitable edge, it's designed for certain conditions, not for all conditions. Your strategy will not work every single day. Therefore, unlike you think, it's actually better not to trade daily. Rather, what you want to do is focus on days that have high probability setups with good market structure. Rule number 9 is another very important rule. Honestly, every single rule that I go over today is very important and they're building blocks to your success in trading. And tracking your performance is number 1 key thing, because if you never track your wins and your losses, what you're doing right and what you're doing wrong, you will never know where you're going. It's like building a map on a road. If you never keep track of anything, you will never have a map to what direction you're going, and you'll always be stuck in a loop, lost in a circle. So you want to start painting a picture on your weaknesses and your strengths and understand how to tackle your strategy with the best precision as possible. And tracking your performance, one of the things that really helped me become profitable was tracking every single trade that I took, the time that I took it, the entry, why did I take it, how much the contracts cost when I took it, how much was my net percent win, how much was my net percent loss, how did I feel when I took the trade, and how did I feel after the trade. I literally wrote in detail in a journal every single detail from beginning to after, during the trade, everything. And I still do it till this day. And this is what really helped me understand my strategy and made it foolproof and really helped me gain confidence in what I'm doing. You don't want to be blindfolded throwing darts in the market trying to catch a good trade or not. I've seen a lot of people join this journey with me, and what they do is take a couple of good guessing trades. They make a lot of money the first week or two, but by the end of the month, they've blown all of their money and they never had no real strategy or risk management to it, and they eventually stopped trading. Versus me, I stayed in trading the long term because I was able to build all of this up. And this goes for you too. If you don't start building up the blocks now, you're just gonna be another person that got into trading and left because they lost all of their money without actually finding their perfect strategy and edge in the market. And rule number 10, this is going to be crucial, and that's pretty much tying everything I told you and putting it all together. If you follow all the steps and rules, you'll see your trading performance 10x. And the key is to practice every single day and compound your skills and account slowly. Don't try to learn everything at once. There's a lot of things I went over in this video, but you want to take it step by step. You want to take it slowly and go over everything in detail so you fully understand. But the best part is I have an exclusive Discord where I go live every single day and I stream all of my trades that I take personally. And you could come and join me and watch as I take every single day trade live, and I call out swing trades, leap trades, long-term holds, and everything. And I have a whole education section in my Discord going over charting, terminology. I have ebooks in there that I have read, fundamental and technical analysis, and a lot more. I also have a trading strategy where I break down my strategy step by step in my Discord. You can be a complete beginner and join my Discord and start making money while you're learning how to trade, and watch me do this live and have a good understanding on why I take these trades. Why not join my Discord and earn while you learn? I have all the sauce in my Discord. Literally everything that I know is inside my Discord, and I'm not going to charge you thousands of dollars to get in this group and get this information and watch me trade live. The whole purpose of me creating this Discord is to help beginner and intermediate traders get better at what they do and help them build a profitable strategy and help friends and family out. The thing is, I practice what I preach. I do this live every single day, not like these other gurus that sell courses. I actually do what I say. This is going to be the ending of the video, and I hope you wrote down all these rules step by step on a piece of paper so you can actually take action. The best thing to do is to start now. Never wait and procrastinate, because time is just going to keep going. Life moves quick. You don't want to get left behind. So it's up to you if you want to take action or not. I'm going to keep doing what I'm doing and providing value. And I hope y'all stay blessed. Peace out. See you in the next video.